There are steps now that you can take that will minimize your income taxes in 2014. Here to give us a few of them is EisnerAmper's Tim Spiess. Welcome, Tim.
Good morning.
So, Tim, you said first run some projections. What did you mean by that?
Absolutely. There were many taxpayers that were surprised at April 15, 14 because they found they were exposed to the 3.8% tax on portfolio income. We're talking about interest, dividends, capital gains, and also the 0.09% tax on wages and compensation. To eliminate that surprise this year, what we're advising is in June and in November, reviewing and looking at those two taxes. There's deductions you can take against that 3.8% tax. Management fees, state and local taxes attributable to portfolio income. That's probably one of the first things you can do to reduce your 2015 tax bill.
That's a great tip. And what about investment income? How should you be looking at that?
Well, that's interesting in the context of where someone's investment sentiments are. We're looking most likely at a continuing interest rate environment, which means that if an investor's been overweighted toward equities, they might want to relook at their total allocation, which is what we help our clients do, based upon their risk tolerance, cash flow needs, 5-year investment horizon, and so forth. So those are all things to consider. Also, again, back to your earlier point, most clients don't want to have to invade their investment portfolio for a large tax payment. All the more reason why looking at your tax projections now to really know where you're going to be in April of 2015 would be very prudent.
You don't want any surprises later on. Now,
Right.
If you're a New York State resident, what should you be thinking about?
The alternative minimum tax. New York has one of the highest state and local combined income tax rates in the United States. California is now at 13%. That causes many taxpayers in those jurisdictions, New Jersey as well, to be in what's called the alternative minimum tax. And we were talking earlier, what I told you about was state and local income taxes and real estate taxes are deductible. However, on a side calculation, if you add them back for what's called alternative minimum tax, and then take that taxable income at 28%, you're going to pay the higher of that AMT rate of 28% or your regular tax rate considering those deductions. So once again, 2 reviews. Look at one in June, look at one in November. Often what we advise is to try to bunch up your deductions into 1 year, perhaps December of 2013 or 14, so that you're moving deductions out of 2015 into 14. Maybe you can reduce your 2015 AMT.
Good tips. Thanks, Tim.